Welcome, it's the Crypto Sniper. How are you guys doing? Glad to be back with you, and we're going to do a little deep dive on one particular token. Yes, that's right, the hype. We're going to talk about the Hyperliquid, but we're also going to do a short update on BTC before we talk about that. We haven't updated you on crypto in a fair bit, and yeah, it's about time we did so. So let's have a little bit of a look. This is Bitcoin. So God market, Bitcoin. This is squeezing higher, guys. I know it's frustrating for most people, but this is a squeeze higher. Yes, there's some concerns with marginally higher highs. You've just done one here. A little bit of a marginally higher high to those two highs over there. But this is typical of squeezing higher. That means there's been some buying coming up on the macro time frames. We are on the weekly there, by the way. So yes, there was a bit of bleed out there, but you could see the buying started to come in, and then you've gone back up, and now you've got very low volatility. I'm going to drop down in that in a minute, and I'm going to be showing you what's going down in there. But I think crypto could do okay. I don't think this is over, but it's a slight concern when you get a marginally higher high, but it could quickly move up, and then we'll be looking at an interaction with the upper side of that squeeze. So we'll have a little look at it. Let's drop it down to the daily time frame just to give you a better picture on what I think is coming down on Bitcoin. So interestingly, you've been in a range. And range trading is very frustrating for a lot of people because people trade breakouts inherently, even when they're not sure. You might remember that lovely little squeeze there. See how that gave you on a small time frame, a nice little move up, and was part and parcel of the reflation back up after the corrective spell that actually took a large part of the year so far. You know, from around back end of January all the way through into April, you were heading down, and in actual fact you only made a new high after that upside HVF broke and ran, and that takes you all the way quite deep into May. So since then, what have we been doing? Well, you dipped all the way down, you came all the way back up. This is very much range based, so we're staying above 100,000. You made a marginally higher high, as I've said. I've warned about that, but providing you run it and go a little higher in due course, you should just about be okay. So we've had hammer, very low vol hammer, spinning top, and a little bit of an inching forward. I think there's possibility we may be getting another squeezer to actually get you to that higher point later on Bitcoin. So whilst many people are feeling really bored and a bit disappointed with crypto, actually it could squeeze a little higher coming up, and if this does what we think it might, maybe a little bit of a rest, you could get a mini surge to the higher side. Don't forget, we also on a far bigger time frame, we've drawn the inverted head and shoulders on Bitcoin and called for a 144 some time ago. We haven't reminded people of that, and there might be many new viewers, but that goes something like this. Let's go fat Koki or a fat O1. We'll go with the blue for our neckline, and we've kind of done that with you. Now it's quite small shouldering. Those are your shoulders. And you did get the broadening that was in the direction of a revisit. A descending megaphone broadening off a bullish pole. See that? Okay. And this overall is your head. It's a bulky head. This is complex head and shoulders. It's not traditional technical analysis at all, but that generates up. Will take you to the 144 level. So it's continuing to walk out, as I say, and there's a reasonable buy line, but there have been periods of dull sell-off that can be quite lengthy. People got real frustrated here during this period as well. So this is for the patient. And the people that understand timing and technical analysis. I think, as I say, you're going to squeeze a little higher, and you're part the way of an up leg move that'll probably bring you in and around these levels at some point. You could then come off again, and that could be longer than people like again, and they get a little bit impatient. You could come off, you might come all the way to the downside, you could re-interact over here before making the 144 to the upside at a later point. Possibly you could make the 144 out of this. It depends. It depends a lot on the dollar. you need to follow the Market Sniper YouTube channel, where we do a lot of talking about the dollar, and we're kind of concerned about the direction and the strength of the dollar personally as well. Anyway, that is your update on Bitcoin. So many will ask also, and it's an important small technical point. So we've admitted to being twice early on calling Bitcoin dominance reversal. We went for it over there, and I think we went for it again over there. We haven't gone for it again yet, but eventually I think it comes. But one of the key reasons, and this is Bitcoin dominance inverted, by the way, we're the guys that always invert. One of the key reasons we need to discuss this, and I just want to make this clear because everybody wins the major alt run. Actually, certain alts have done pretty well so far, but only some of them. It hasn't been a broad alt rally, and I'm going to come to the main culprit in a minute that's seen the Bitcoin dominance not rotate. So this is the big, and these dashed lines are the areas where we anticipate this reversal. It's again very low vol, might not be far off. It might still come a little deeper, we don't know. But one of the key reasons this falling wedge has continued to bleed out to the downside is the following. And for that, we probably need the coin market cap website to show you. One of the key reasons is Ethereum. That's right. Ethereum has lost its mojo entirely. So this is what happens. For the alts to start overperforming, you need the biggest alt not to be garbage. And Ethereum has been garbage. It's at 315 market cap. We can actually show you the chart for it. We'll say goodbye to Bitcoin, or maybe we should actually split the chart and put Ethereum on the bottom. Let's do that. ETH.D, and explain how actually Solana's done great. XRP did better than Bitcoin. Solana's done quite a bit better than Bitcoin. But if you take from the lows, there's the 15K lows essentially of Bitcoin, who's done what? And this is where your measuring tool is very, very useful. So we'll lock on the lock. The key reason why Bitcoin dominance has not yet turned can be summarized in one token, a garbage Ethereum. Let's do that one again. It didn't lock on the right place. Put him on and go again. And let's pull that down a bit, get my menu out the way. Bitcoin has done 582% to the upside since it was 15K. And it's done that over a period of 938 days. 100, my apologies. It says 938. I think it's 134 bars. That's right, it sounds right, since it's low. So 938 days it's taken to get there, but it's done 582%. Now, go and do the same draw from roughly the same time. Now, Ethereum was actually lower over here, but we take it from the same day. We treat it when Bitcoin bottomed. How have they done? And this is the second biggest by market cap, Ethereum. So you've got the biggest giant who hogs the space. You know, he's over 60% by market cap, has done 582.29. You need the rest of the major players to average between them 600% probably to get beyond. So Ethereum is still double XRP. So it is the whale of what's left. And it's done 142%. This is one of the reasons why your Bitcoin dominance, not enough people are talking about this. Because actually you have had overperformance out of Sol, that's done over 1,000. You've actually got XRP, it took a long time, and a lot of it came in one move. So people who bailed out of XRP wouldn't have got it because you would have sat sideways for a lot longer, but then suddenly you got your surge. If you understand HVF method and you were following us, we were watching it like a hawk and we ensured everybody got in on the spike. Now there's a lot of after timers calling it. We had you in before, but that is also a beat of the 582, not by a huge amount, just getting to the 600%. As I say, sold to about 1,000. But if you take it to where they are now, 143% by Ethereum is the reason the altcoin market hasn't turned. If the largest alt, which had a 313 billion market cap, back to our coin market cap here, was Sol, which did over 1,000% taken from the Bitcoin low. That's not a pump or a shill for Sol. I have serious doubts about the VC token in many ways, but let's forget emotions here and who your favorite team is and just look at the hard facts. XRP has done famously by getting into 130, but it was down at about 6th or 7th place. It shot up to 4th. Its percentage was superior to Ethereum, and it was superior to Bitcoin marginally. It didn't kill Bitcoin. So the real problem has been the fact that the single largest alt token has been superseded by preference by many other smaller tokens that haven't scaled and got to the capitalization that they can offer that aspect. There's another, I would say, fundamental reason. These are technical points. I'm showing you the percentages, by the way. This can't be argued, and they're based off chart data. Now, that would be roughly the low for Ethereum, but we've decided to take the low on the day that Bitcoin bottomed. You will see that XRP's done okay. Actually, it's now slipped below. It was a while since I'd done that. So XRP's really only matched Bitcoin. It's 545. It's a tiny bit lower. And it was heartbreak material as well. So people have to respect that Bitcoin, and everyone will know I'm no maxi and I have no illusions about who created it, at least continued to climb from its low all the way through steadily. Had you sat in XRP, basically you got the better part of, since the lows until November 24, since the bottom 2021 to November. We're lucky because we have HVF method. We just showed up for the good bit. That's called fast moving breakout trading. And that gave us the squirt, which was over there. And we sold, as we mentioned, 3.36, which is actually on the top of that wick, where the highest point is 3.4. A large part of our holding, not everything, a large part. So we were lucky. But for most people, they sat through 9 months, no, not 9 months, 2 years. And 21 November, actually it's 24 November, 3 years of sideways. And actually, this dull recent price behavior, we warned that channel was not good with the thing, has seen us not put a lot of coverage XRP's way. Don't get me wrong, macro-wise, 19 plus dollars, 35 cents, as we've said before on the macro, but these are big time frame setups. So we're not sitting and waiting for it to make up its mind. It's clearly underperforming. Small bit of support. We've highlighted the 2 level. It's actually fallen below, with this dull price behavior recently, what Bitcoin's done. So the next biggest after Ethereum is failing to match it. Ethereum missed it 140% versus nearly 600%. I mean, Ethereum, call it 148, it was 150 compared to Bitcoin 600. Let's keep the numbers simple. Ethereum's done 150% to Bitcoin 600. 450% behind since 2021 low. XRP, let's call it a match. It's tiny bit behind. It has been quite a bit ahead when we were up here, so it's there or thereabouts. XRP has only matched Bitcoin. That's the next biggest market cap. So simple mathematics tells you that the fact that, let's clean our face here, this guy is sitting at 313 instead of already through $1 trillion market cap of its own, is part of your problem. This should be through $1 trillion. And that is why your Bitcoin dominance is digging so deep. This coin has been a pig. A pig. Okay, so a little bit of heads up and some interesting observations. Some of you will say, do BNB, Francis, do Solana. So I will do them quickly. And then I want to get on to actively how we've made alpha and made money utilizing HVF method, trading in what looks a pretty dull, big cap crypto environment. So let's finish that exercise and put in the others on there with you. So you might want BNB, which is the next big one. And this is, as I say, we'll continue to illustrate the aspect that not so many. We have, of course, chosen Bitcoin's low, and we have not taken it from the low of the individual alt. So it slightly favors Bitcoin, which is why, as I say, here, 160%. BNB. Well, you know what happened. You had the 160%. BNB is barely better than Ethereum. So you've got a terrible performance from BNB since roughly the week of Monday 21st. This is a weekly chart, November, the same place. Barely a better performance. Bitcoin was going up from that low, and BNB's done 160%. I mean, that is Ethereum bad. Of course, it had that, you know, they needed to change the CEO and punish everybody. Funds are safe, who had to go to prison. Poor guy. I don't think he was particularly guilty of that. I think a lot more criminal people have got away with a lot more than whatever it was alleged he was to have done. But, you know, that's beside my remit to actually comment on. Let's have a look and show you Sol. Sol is probably, despite what everybody who hates it will tell you, the only one that's potentially really outperformed. And it's at 1,318% to Bitcoin's, call it 600. So you've got 1,300 versus 1,600. It's a more than double the performance of Bitcoin. But that doesn't mean it was an easy ride. You would have sat and gone sideways for at least 23, most of 23, and then roughly from November of 23, things started to get saucy. You had a nice wind up over here. And actually, if you took it from one of these higher points before the alts started to fizzle away again, it would be it would be in the 2,000 pluses in terms of its overall performance. That's mark to mark as it is now, with most of the alts well off. So this is a major lull. And that's another thing, because of BTC's tendency to grind. We've had quite a bit of indifferent periods. And the irony is, the indifferent slow periods, Bitcoin pulls back less while the alts die hard. They've come right down, as you can see. Huge correction. You're sitting there at about 85, maybe call it 87, possibly 90. But you were at one point 290. You know, coming down from 290 to 90. I mean, you've shot 70% of your market cap. This thing would be at 3,000, in fact, plus percent at these highs. So these fizzle out periods that have been quite lengthy. Over here, it put a cap on a lot of alts during this period. It continues to main. So the less violent the move with regular pullbacks, the more damaging it is to the alts, and the longer the BTC dominance market has persisted. And that's super interesting. So you've not had a runaway train of a number of weeks where big cap alts are putting on 2x, 3x on a sustained basis, and it's pretty much across the board, some more than others, but they're all, the worst are doing 2x, 2.5x, and some are doing 5x, and some are doing 6, etc. in that mega surge period. That is when you get the violent change in Bitcoin dominance. But the key mathematical aspect is your most dominant alt has been absolutely poor. It's not been supported very well by the likes of BNB either. If we looked at those big tokens, and Doggy has been poor. Only Solana has really properly beaten it. XRP has matched it, but you had to wait a whole winter, a very lengthy winter, to get your surge. And that was pretty much catching up on what you should have got probably last time when the SEC had put the brakes on XRP. Anyway, let's move on to what do you do in a crypto market like this if it's potentially going to continue like this. Well, there's a recession and retail isn't the key driver. And so I want to just play you a video that came out of an update, a community update that we did on Hyperliquid. Now this is a coin, as I say, very little that I know. It's a derivatives platform. Okay, cool. It's recently started to come into the top 25 and has been moving up. It's sitting outside the top 10 at 11 right now. And we've been saying when it was around 13, thanks to this technical structure, that we expect it to actually pop into possibly the top 10, but not yet. There's quite a jump from 14 billion to 22 billion, which is Cardano. There's quite a jump. You know, that's a better part of 7 billion. However, it is looking interesting. So let's go to that video and you can have a listen to what yours truly was talking about. I think you could have a setup for a trade here in Hyperliquid. and I know nothing about it, and that's exactly how I like it. So if we get this draw up, bring me the tool, out he comes, and we go, okay, what if you're a relative low 2? And we tell you that we don't know where the third impulse is because we're still working it out, and you can do a prediction for us. And I would give that as a trade on a 4-hour time frame. And that would take you to 45. You're currently trading 35. You might be able to buy it somewhere at 34s. You can put a stop at 32s. You can risk $2. 34 to 45, you can make $11 and risk 2. That's a 5.5. You might get a bit of overperformance. I wouldn't want to bake that in. But this is winding up because it's close to its last high. So it might be about ready to start another run. And you could end up with a wild card. So close 75%, leave 25% in your lottery ticket, and hope Hyperliquid ends up at number 8 in a few weeks' time from 11. And has jumped Ada, Tron, and a few others with a bit of a mini surge and a story. Who knows? But that's my take on crypto. That one is for you as a trade. Given it's out of the blue and recentness, it might be some major brilliant. So Hyperliquid was highlighted by us as a trade. So it's a trader's market. It's not an easy everything you invest in goes to the moon market. You have to be picky, you have to be selective, and also you have to work on, listen, do this, buy then, and then get out. And we have time stops. It's only, I don't know any other methods that actually has baked in, geometrically generated time stops as well as interim targets along the way. So let's see how that did. It was 35. We've done a couple of shares on Twitter for various other people. I want to show you and take you into the making of Hyperliquid. So we were here talking about this, but we'd actually been keeping half an eye a little bit earlier. We were here while it was at 35 and talking about it. There was an upside HVF. We're on a bigger time frame. That was a 4-hour time frame that I was illustrating then, but we did actually, and it's not that long been listed, by the way. Let me just show you how that's come about. There you go. The listing looks like it took place around about November 2024. And that's how we've been watching it. Got hard sold into a capitulation low at about $9. So what we have is we have multiple patterns. This is the current chart now. This was obviously our community update that we're doing on crypto. You're missing this, by the way, by YouTube. Sorry, I have a certain amount of people I have to serve that are clients versus the updates on YouTube, and we also obviously a lot going on in traditional markets. So you will miss some things that are going on in crypto, and this is the first time in a while that I've got some time to catch up. So this is an inverted head and shoulders by complex head and shoulder theory. We've got roughly a 21.27.275 neckline here, and you had this capitulation low. Now, what capitulates into a low often melts up into an exhaustive high later. And this is what we think may be occurring. So there's a big structure. When we trade, we like to trade multiple patterns within each other. So that's your left shoulder. This is your very bulky head. And that is your right shoulder. Kind of small and subtle. And that was our chosen neckline, 21.275. You can see you should get a violent move, a proper breakout move. And that's what happened there. Then you wound up a little bit to go a little bit higher. You had a falling, either a flag or a little bit of a broadening structure possibly. That set up a nice surge over there. That was a great move. And now you have the upside HVF that we were showing you on the 4-hour. Remember, we're on the 12-hour here. Now, why is this interesting and why am I showing you a bigger pattern? Because you trade macro down to the micro, and the macro gave us a target of 48.722. That means right down here at 21.275, we had that target generated from an inverted head and shoulder, looking at not too far from the $50 mark. Now, why is that interesting? Well, we're going to show you as we've got closer to that how it looks. So we wipe our face up. Now this is the smaller of the two, so I'm going to go out of the 30-minute and take you first to the 2-hour time frame. So this again is the setup we were looking at with the community update that we were showing you. By the way, we also gave that to our non-farm payroll visitors that came on the previous Friday as our chosen trade of that week. So this is the setup. That was the triggering event. Note, you should have a violent move that confirms the break. We call that a triggering event. A little bit of a squeezy Japanesey in there. Surge, cross the funnel, run the third high, smash it up, small pullback, go, and surge. So this is a macro setup. That is its details over there. By the way, target 40, my apologies, this is it here, 44.896. You see that? 44.896. That is that purple line over there. A great break. And you've seen how it progresses. But nothing goes up in straight lines. And sometimes the fact that it sells off is a gift, not a burden. Because what did it do? It set up the secondary setup that we were showing you on the half hour. And we'll tell you why it's a gift, not a burden. And when did it occur, by the way? Here is our second interim level over here, right there. And once you run it, you got a first pullback. Then you started a little bit more of a grind. You can see it like that. A little bit more of a grind. And then you started to get some hard profit taking. People that couldn't... and of course, we had Bitcoin sell off. Key point as well. Smash all the way down. Where did you support? First interim. So that's soul destroying, but you should ignore it. Set and forget trading. Sees me be where I am now instead of on 9 screens dealing with other things. You should not be sitting panicked because you will invariably sell out on the low. How many times as a trader are you watching and go, damn, I can't eat that. I can't believe I'm going to round trip it. I'm going to lose all my profit. You were watching the screens, you sold out at that bottom, only then to watch it go back up. You charge back in because you can't bear to be out. It comes back off again and you sell off at the bottom. In the absence of method, emotionality is the default setting, and pain gets you out, greed keeps you in. Okay? Understand that. Pain gets you out. Big moves to the downside will hurt like hell because they will take back profits or they will be adding to existing losses. This is a squeezy Japanesey on the M30 time frame. So this is the 2 hour stroke 4 hour. 2 hour, I'm going to do Z Greek 2. 2 hour, 4 hour setup. So I showed you a daily inverted head and shoulders. Now I'm showing you a 4 hour setup, and now in play of the 4 hour setup, we are getting a minute 30 setup. But here's the interesting thing about the minute 30 setup. It all occurred after you made the interim level 2. A warning to you to chill. Things might not go your way for a bit, and you must calm down and let it do what it's got to do. Adhere to process. What did it do? Actually, the gift is, apart from it about ready to deliver the target of the 4 hour, is that it's given you a boosting target. It's set up a new HVF, and that new HVF is giving you the target of 47,190. So let's clean our face because we've done a lot of scratching. So many people saw the sell-off as highly negative. Of course, if you were watching it, it didn't feel good. The rally, the boost, and it killed some time. If you've got a leverage trade, which we do have on this, you're sitting in the trade a little longer. Guess what? You paid to access that leverage. It's okay. You're going to get more on your target. So this is not only a winding up process, it is a booster to your overall target. Your targets get moved from the 44 to the 47. Now that's a heck of a difference to your rate of return, your risk rewards. So your market loves you and wants to give you gifts. But sometimes in loving you, it has to punish you. It's like a dad. You know, you love him because you have to learn to respect him first. And he hit you with a stick when you did something bad, you know. But when you needed to hear an encouraging word, you got it. It wasn't always love, puppy dogs and lollipops and all the gifts you ever asked for like a spoiled brat. That's not the right kind of dad. That kind of dad doesn't get respect. This kind of one does. It sees if you've got the guts to stand to process, and then it gives you an additional gift. You see what that's done there? That takes that to a 7 risk reward trade, assuming you got in when then. We actually took in early entries, so we've actually refined the squeeze a lot more, but the stop is definitely there. You might have got in before. You saw when we were talking about it, it was actually over here, and that stop is now really, really tight. But let's leave that point for a while. which is a bit of a technical one, and say, here you are at a 7 where previously you would have been at a 5.6. It's very good. But hold on, there's another purple line. There's another purple line that is out there, and that's sitting there at 48.722. Where did that come from? Well, I had to go back and remind myself. Yes, I'd drawn the inverted head and shoulders. So what we actually are having is we're getting a spate of technical targets that are all forming around this level. You've just got a booster. So in HVF method, we trust. And this wind up says, okay, now that we've got closer to the event, we gave you a conservative target, we're ready to scrape a little bit more out of the bottom of the jar and show you where it is. So the bigger the time frame gives you an inherently conservative target that should be run. When you get a wind up and we've got closer to the end goal, this is how much energy we've got for the upside, this is how far we pull back, and this is how far we should regenerate to the upside. You're going to get a booster, 47.19. But then you say, hold on, 47.19 is very close to the 48.7. I say very close, it's reasonably close. There's a confluence of targets from the original inverted head and shoulder. So what then becomes the question is, you can take 50% off here if you're nervous, or you can hold out for the full inverted head and shoulders and realize that this 4-hour HVF, the bigger pattern, actually invited you to join a big macro pattern setup that started way down at $21 some time ago when I was showing you the daily chart. Excuse me. So that is how you multiply yourself to wealth, and the market gives you gifts even when the price behavior doesn't feel that awesome or rewarding. Stay in the process. You have a stop loss, a target. Emotional trading inside of a method will see pain take you out. You will sell lows instead of highs. Now, even if I had left the target that I originally had, I would probably be close to, or maybe might have already been executed on a high after a major move up. Most people exit on stop losses. Stop losses are an awful exit strategy, or on pain on pullbacks. In short, if you look at where everybody exited on retail trading, it's along the lows and near the lows in points of pain. It's not on the highs or localized highs on points of major profit. Why? Because they do not have take profits. They do not have a justifiable reason as to why something might reach a certain level. Until you have a proper geometric HVF method pattern generated target, you do not have the opportunity to sell highs. And that puts you in a terrible position, because it means whatever exit you're doing, you're exiting on adverse price behavior. That means bad price behavior. In other words, you're getting a stop run. Even if it's past your entry and you're treating it as a trailing stop, your exits are always disappointing. Our exits are always upside surprising. That's the value of HVF method. That's why you click the link below and you secure for yourself the method, the madness, and the ability to stand back and allow process to work with you, and multiple patterns inside of each other to boost your eventual reward. It's quite common when you get a confluence of targets, each one clustering quite close. So we'll have 3 big generated targets from a 4-hour pattern, from a daily pattern, and a minute 30 pattern that is in between. You're actually getting a cluster of targets that is telling you that the 48.7, you might be lucky and get a run of the technical run of 50. I wouldn't push my luck personally. I'd take the 48.7. You would have an extended period of pullback and adverse price behavior thereafter. In other words, you've had a great run, get out. This is trading in an otherwise pretty dull alts market, top 10, top 15, top 25 market for making money, where Bitcoin dominance is still making new lows, and the major alts are still not stealing any of the capital that should be coming, that normally goes into Bitcoin. You are still seeing dipping lower and lower. And we've decided and understood that the key project, Ethereum, has done the most damage to the turn in the Bitcoin dominance. But in actual fact, only certain alts have overperformed Bitcoin in the top 10, top 15, and quite a few have underperformed, including Binance, which was no better than Ethereum, has not contributed to a reversal in the Bitcoin dominance, and only the likes of Sol, XRP's kind of matched, but it was a long old wait and desert of no contribution and then suddenly a surge. Thankfully, we were able to participate in that. So in actual fact, the biggest problem to the Bitcoin dominance turn is probably Ethereum, but it's not the only problem. And it's a trader's market. And these are the opportunities. I would imagine Hype is going to move nicely, probably clear that 48.72. We're more confident of the 47.1, of course, because it's closer, and more importantly, it's an upside HVF. So we may take some of our profits at the 47 and leave half at the head and shoulders. At the end of the day, you have to learn to trade to the degree of your comfort and to the time frame that your views are built around. It's when you have long time frame views, opinions, but you're trading on short time frames, you're always getting out on minor pullbacks and not getting the full benefit to your wealth building in crypto. And that's where method comes in, that's where a community comes in, and that's where setting up and allowing the patterns to keep rewarding you and staying patient and submitting to process and guidance is serving you. For that, you click the link below. We're here to help you build wealth in reset times, and boy, is this reset times, to save that wealth, continue to build it, but also to preserve it in reset times. Governments are going to go into scavenge mode, particularly in the Western markets. And third and finally, give yourself optionalities. You can have the freedom to be anywhere. It's much better to be in the Southern Hemisphere when they're talking about nukes. Okay, we shouldn't go down that topic. Okay, thanks for watching. Hit the like and the share. This is how we have gone and built on. And I thought every now and then it's worth giving you guys an example. We haven't put anything out on crypto, but what is it we actually do and how it's doing? This is a great example. They don't come every single day or week necessarily, but continual wind up, stay with the trend. Keep on keeping on. Continuation is your friend until all the targets start to confluence. Stand back, take your profits, let it pull back. You'll be getting into bigger time frame setups on that pullback at a later point. There is no bad price behavior. There is just your bad positioning for the given price behavior. Catch you next time. Thanks for watching. Bye for now.
Tired of profit wipeouts and blown accounts from following trade signal groups and other YouTube channels? Looking for a better way to trade, reduce your stress, and minimize your risk? Become a skilled technical analyst and see the charts and markets in a new light using the successfully proven HVF method by Francis Hunt, while being surrounded and supported by a principled, structured, and experienced community. Enjoy a constructive learning environment while practically trading markets, supported by a bespoke platform run through browser and app, specifically designed to teach and engage you whilst learning and growing as the markets move. This is not a Telegram or Slack signal group. All trade ideas are based on a proprietary technical analysis process honed over decades, which is the HVF method, leading to trade ideas with fast-moving breakouts and tight stops, exact entries and exits, nuanced interim considerations, and ultimately, strong rewards. Submissions are graded and scored by Francis for potential high-quality setups, and we provide bespoke tools to help get the job done properly and with precision. Over time and with focused effort, you'll begin to look at charts and price action just like Francis. Community updates every day by Francis and our 3 webinars a week provide a 360-degree approach, which are presented by our experienced team of trade leaders to spot potential trades. We're a community of self-actualized individuals, spanning the globe and active 24/7, 365. The premium community provides a warm, supportive, and cooperative place for people willing to listen, participate, contribute, and to learn. We've changed thousands of traders' lives. Transform your approach to trading now. Transform your life. Book an introductory call with us on the link below.